If one of your tenants leaves a pan on the stove, walks away, and starts a kitchen fire that guts their unit and damages 2 units next to it, who's writing the check? Most property managers and landlords I talk to assume their insurance handles everything. It doesn't. And if that tenant doesn't have renter's insurance, you're about to find out exactly where the gaps are, the hard way. I run an independent insurance agency. We write home, auto, renters, landlord policies, all of it. And one of the most common conversations I have with property managers and landlords is about renter's insurance, specifically why they should require it from every single tenant and every single lease, no exceptions. This isn't just a nice to have. This is one of the simplest ways to protect your investment, reduce your liability exposure, and avoid situations that cost you thousands of dollars and months of headaches. Let me walk you through exactly why. Let's start with the most common misconception I hear from landlords. My landlord policy covers everything. Your landlord insurance, often written on a DP3 or similar landlord form, covers the structure, the building itself, the walls, the roof, the flooring, the built-in appliances. It also typically covers your liability as the property owner and lost rental income if the unit becomes uninhabitable after a covered loss. What it does not cover is your tenant's belongings, their furniture, their electronics, their clothing. None of that is on your policy. If there's a fire, a burst pipe, or a theft, and your tenant loses everything they own, your insurance will not pay for any of it. That's their problem. And here's where it gets uncomfortable. If that tenant doesn't have renter's insurance, they have no coverage at all, which means they've just lost everything. And when people lose everything and have no insurance, they look for someone to blame. That someone is usually you. There was a legal case reported on Avvo where a tenant in San Antonio lost all of their belongings in a fire caused by a neighbor's cooking accident. Total loss, no renter's insurance. The tenant's only path to any kind of recovery was suing, either the neighbor who started the fire or the landlord, trying to argue the building didn't have proper fire safety systems. That's what happens when tenants are uninsured. It doesn't just hurt them, it creates legal exposure for you. Now let's talk about what renter's insurance actually covers, because a lot of people, tenants and landlords alike, don't fully understand this. A standard renter's policy, which is called an HO4, covers 3 main things. First, personal property. That's the tenant's belongings, furniture, electronics, clothing, appliances they own, covered against named perils like fire, theft, vandalism, and certain types of water damage. Second, liability coverage. This is the part that matters most to you as a landlord. If your tenant is legally liable for damage to your property, say they leave a candle burning or a bathtub overflows and damages the unit below, their renter's insurance liability coverage can pay for that damage. Without it, you're either filing a claim on your own policy, paying your own deductible, and potentially seeing your premiums increase, or you're trying to recover the money from a tenant who may not have it. Third, loss of use. If the tenant's unit becomes uninhabitable due to a covered event, their renter's policy pays for temporary housing, hotel, short-term rental, whatever they need while the unit is being repaired. Without it, that cost either falls on the tenant, who may not be able to afford it, or it becomes a pressure point that leads to disputes, lease terminations, and legal headaches for you. Here's a number that should get your attention. Roughly 40% of renters in the US have no renter's insurance at all. That's tens of millions of households with zero coverage. And when you survey the ones who don't have it, the number one reason they give is they thought their landlord's insurance covered them. It doesn't, it never has. So you've got tenants living in your property with tens of thousands of dollars worth of belongings, zero coverage, and a fundamental misunderstanding of how insurance works. That's a problem, and it's a problem you can solve with one line in your lease. In most states, including Nevada, Arizona, Utah, and California, you are legally allowed to require renter's insurance as a condition of the lease. It's standard practice, it's enforceable, and it's increasingly common. Many of the large property management companies already require it. If you're an independent landlord or a smaller property manager and you're not requiring it yet, you should start. Here's what I recommend you include in the lease requirement. First, a minimum liability limit. Most renters' policies come with either $100,000 or $300,000 in liability. For your protection, I'd recommend requiring at least $100,000, and $300,000 is much better. The difference in premium for the tenant is usually just a few dollars a month. Second, require that you, the property owner or the property management company, are named as an additional interested party on the policy. Not additional insured, just additional interest. This is an important distinction. It doesn't give you coverage under their policy, but it means you'll be notified if the policy is canceled, lapses, or isn't renewed. Without this, a tenant can buy a policy on day one, cancel it on day two, and you never know. Third, require proof of coverage before they move in and at each renewal. Make it part of your move-in checklist. Policy declarations page showing the coverage is active, the liability limits meet your minimum, and you're listed as an additional interested party. Now, I want to address the pushback. I know some landlords worry that requiring renter's insurance will scare off tenants or make their units harder to rent. Here's the reality. Renter's insurance costs, on average, somewhere between $15 and $20 a month. Depending on the carrier, the location, and the coverage level, some policies come in under $15. We're talking about less than the cost of a streaming subscription. If a prospective tenant is unwilling to spend $15 a month to protect their own belongings and your property, that tells you something about how they approach financial responsibility. That's not a tenant you want to lose sleep over losing. Let me give you the scenario that plays out most often, and it's not the dramatic fire. It's water damage. A tenant leaves a washing machine hose connected and it fails, or a toilet overflows on the second floor and damages the unit below, or a kid flushes something they shouldn't and it backs up the plumbing. These are small events that happen constantly in rental properties. Let's put a number on it. Say a tenant causes $18,000 in water damage to the unit below. If they have renter's insurance with $100,000 in liability, their policy handles it. If they don't, you're writing the check and chasing reimbursement. When the tenant has renter's insurance, here's what happens. The tenant's liability coverage pays for the damage to your property. Their personal property coverage handles their own belongings. Your landlord policy stays untouched. No claim, no deductible, no premium increase. When the tenant doesn't have renter's insurance, here's what happens instead. You file a claim on your landlord policy. You pay your deductible, which might be $1,000, $2,500, or $5,000 depending on your policy. Your premium potentially goes up at renewal, and then you try to recover the cost from the tenant, who may or may not cooperate, may or may not have the money, and may or may not still be your tenant by the time it's resolved. And here's something most people don't think about. Even if you file a claim on your own landlord policy, your carrier may pursue the tenant for reimbursement through a process called subrogation. That's your insurance company going after your tenant for the money. If that tenant is uninsured and still living in your property, that's not a great dynamic for anyone. Which of those two scenarios do you want to be in? There's one more piece I want to mention, and this is one specifically for property managers managing units for investor clients. If you're managing someone else's property, requiring renter's insurance is part of protecting your client's assets. It's also part of protecting yourself. If a loss occurs that could have been mitigated by a tenant's renter's policy and you didn't require it, that's a conversation you don't want to have with your property owner. Making renter's insurance mandatory is a best practice. It protects the tenant, it protects the property owner, and it protects you as the manager. It costs the tenant almost nothing, and it closes one of the biggest gaps in the insurance chain for rental properties. If you're managing 50 units and 40% of your tenants are uninsured, that means 20 of your tenants are one accident away from becoming your problem. So here's what I'd recommend. If you don't already require renter's insurance, update your lease language. If you do require it, make sure you're actually enforcing it, verifying coverage at move-in and at renewal, and confirming you're listed as an additional interested party so you get notified if the policy lapses. This is one of the lowest cost risk management decisions you'll ever make as a property manager. If you manage properties in Nevada, California, Arizona, or Utah, and you want help setting this up, we can put together a streamlined renter's insurance program for your portfolio. Minimum liability limits, carrier options, and proof of coverage tracking that makes compliance easy for you and your tenants. There's a link in the description to get a quote or set up a call. Check out our Google reviews to see what our clients have to say, and if you own a rental property in Nevada and want to make sure your own coverage is solid, I made a video breaking down home insurance in Nevada for 2026, including a new law that could affect your policy. It's right here. Thanks for watching.